The clock struck midnight and nobody cared. What's up, everybody? Welcome aboard to Bubba's Bottom Line, and always great to be here with you. And of course, this is our weekly edition as we look back at last week and try to forecast what's going to happen going through to the next week. And of course, the clock did strike midnight Friday morning or night, whichever way you want to look at it, but it is the start of a new day. The tariffs went into place and the markets rallied. Everybody was expecting to see some volatility. People were expecting to see all kinds of things happening when the markets were taking off, and of course they did nothing but churn around. And then of course Friday morning we had the jobs number, and we had an explosion into the upside of the markets, taking away the last couple of weeks of down weeks. And of course that is nothing to be unexpected. It's not something that we would say would be totally unrealistic. The jobs number was okay, but it's as they like to call it, the Goldilocks economy, which is never good for the middle class. It's good for the markets, it's good for the companies, but as you saw, the jobs number, the wages were not as good as they should be, and we'll get into more of that a little bit later. But of course, the tariffs did go into place, and when we look at that as a picture, it is kind of what we have said here the entire time, is that it really doesn't matter. And I think that's something that we need to understand is that at the big picture model here is it really doesn't matter. Okay, I don't want to seem callous or unfeeling about what this is about, but if we can get back to the world, or get to the world of free markets and true free trade, something that we don't have, okay, then you have a better opportunity to really make the markets better and really bring in fair value without the intervention of governments, without the intervention of lobbyists who make these bad deals or convince our politicians to make these bad deals. It would be much simpler if we would then now follow more of the cryptocurrency model, which is true free markets that trade freely, where it takes a buyer and a seller to meet, to exchange wealth, and we move on. But the markets we have now, we have quotas with certain countries, we have this with other countries. So in my opinion, the president has done the right thing here and stand tall, because we are the biggest economy, we are the kings, and we do need to say, hey, enough is enough. We don't mind helping the world as we have always done, but we would also like to have some of that respect about having a free market system versus being manipulated. Now, again, we are not so innocent either, even within our own country, but we have, there are things that need to be done, and I think that we want to see the free market system in place instead of the manipulated system, which will be part of course, my commentary later today. But so the markets, the tariffs went into play. That was that. And so now we'll see the next reaction. And of course, I'm sure there'll be some reaction tonight, Sunday, going into Monday, to see if China has done anything or is going to do anything. And we'll look for to see some market reaction. So we did have the jobs number on Friday. And of course, the jobs number was a blowout number for today's world. But again, the wage growth is not very good. So as they like to call this Goldilocks economy, all right, it really says is that the workers are not making enough money. The profits are great for the companies, they're great for the stock market, but the workers have not realized that wage growth yet. That's an issue to me. That's a problem to me. I think that's where we have to learn to start to share some more of the profits. But of course, nobody cares about that bottom line. They only care about their own. So here we are with a lack of inflation according to the Federal Reserve and their Fed minutes, and they're concerned with the trade wars. Now, why are they concerned about the trade wars? Why are they're supposed to be concerned about the money supply, okay? Why are they concerned about the trade wars when they haven't even started to take place yet? So what are they planning? And this just shows how weak their exit is, which of course that will also be part of my commentary as we get to the end of the show. But so if we look back at the markets, we had an up week for the first week in a couple of weeks. Now again, the Russell and NASDAQ remain very, very strong. The Dow remains the weakest because it is the most sensitive to what's going on globally because there's only 30 stocks. And when you have stocks like Boeing and Caterpillar that are a big part of your index, they are going to go down. So we're seeing this very big divergence between the Dow and the other indexes because the Dow is being most dramatically affected because of its size. Eventually that will come back. It's like a rubber band stretching, and eventually it will come back into play. But in the meantime, here we are with markets that are really just, if you think about it, they're really just churning in a big consolidation pattern. They take a run to the tops and then they come back down to the new support. And it looks to me, if you look at the S&P, it's probably 2690 to 2790, 2680, somewhere in that range. And I mean, a 100-point range is not that big of a range to churn in. It looks to me that the Nasdaq is probably going to try to make new highs again. It looks like the Russell may try to make new highs again. Based on the work that I do, the Dow and the S&P are still in what we would call upper top end or downtrending from the top end of consolidation, where the Nasdaq and the Russell are breaking out. So again, this is a divergence that it really implies that a very big move is going to come here at some point in these markets. And again, I believe that if anything, the next big move, in my opinion, is going to be down. It does not mean we won't grind up 3 or 4% or 5%, but I mean, when I say a big move, I mean a move that's all at one time, that bang, and I think that will be down when it happens. And again, we're not going to predict when it's going to happen. We've seen a lot of pressure on the treasuries. All right, again, yields are falling again. After we had that one burst and got the 10-year to about 315 or so, we have it now falling pretty rapidly. I mean, it's 4 weeks in a row now we've been falling. That to me indicates that the Fed and the economy are not in agreement. Okay, because the Fed tells us how strong things are, but of course the bond market is telling you that is not the case. We're not as strong as you think it is. So that becomes just another issue that we have to look at. And again, that's one of the reasons which you will hear in my commentary, I promise. But we've got a lot of things that are really going on here, and part is the overtaxation and things like that. And we're already seeing that in New Jersey wanting to raise the taxes on their people, and of course you see this in California. That's leading to an exodus of some of these states. This is a problem, okay, because you're already in states that are in trouble to begin with. Now, why is it that certain states that are the biggest tax states can't function? To me, there seems like a problem here, which would mean that basically these states need to be audited so that there's a better understanding of where all the money is going when you get here. Because again, these are problems that we see. And when you continue to say that we are growing in a very strong economy, when I continue to read how strong everything is and how great the economy is, and I'm not saying it's not good. Again, I don't want anybody to misunderstand that I don't think the economy is in good shape. I think that the economy is in better shape. But I think that it's still narrowed into a very few. We have right now the highest percentage of people 85 and over still working. Okay, now think about that for a minute. I know some people like to work because it gives you something to do at 85 years old or whatever, and you want to stay busy. I mean, listen, I'll die at my desk. I'll work till I'm 100 if I live that long. So, but the issue is a lot of people are working because they have to work, and that says that we don't have as solid as an economy as we should have. That tells me that when you have to keep interest rates artificially suppressed down at these ridiculous levels, when we go back in time, and I'm not going to go back to the Carter era when we had 20% interest, but if you go back, the best rate is about, I would say, about 5 to 6% on the 10-year, and that would be something that would be reasonable. But I don't see if the economy is so strong that it can't support stronger rates. But I think that what we see here now is the people that can borrow at these low rates is very few. It's not the masses. And you see the continuing popping up of these peer-to-peer lenders and these outside services, and you continue to see the credit card debt grow. So basically what's happening is that the people are having to borrow from much higher rates. So they're paying in proportion to what they could pay usury rates. If you're paying 9, 10, 11, 12% because you have to go to a third-party lender or you have to pay 18% to go on your credit card, a lot of people are being forced into that. And that's where I think the real issue is. Because if we're having that true great growth and that spurt in the economy, then we should have the need for that, and the lending should be freer. Now, again, on the other hand of that, or the other side of that equation, is the banks are building the everything bubble once again, because there is a lot of lending going on to other things that are not going to be able to be supported. And I think what you're going to see is banks are now buying a lot of these loans from the peer-to-peer lenders, from these outside services, and they're buying them at record numbers. Okay, so they're not stepping up to loan the money at the lower rate, but they are stepping up to buy these loans in and carry them, creating this very similar derivative package, which they carried into the crash in 08, 09, 07, 08, and 09. And I think that's something that you have to understand, that this can never end good. Okay, this can never have a good ending. Now, again, remember, America's going to continue to grow. We are going to continue to prosper. The markets are going to continue to go up 8% year over year. But we have now had such a massive rally on such artificial garbage that at some point this debt bomb is going to explode. At some point, these markets are going to pop. And again, does that mean the end of the world is coming? No, absolutely not. It means it'll be a buying opportunity, or hopefully you're hedged so it won't affect you one way or the other. But the markets, like everything else, can't go up forever. But right now, everybody says they're going up forever. There's no reason that they can't go up. And of course, the inversion of the yield curve is one reason they may not go up farther. The other issues that are out there, that the jobs, although they're better, and people aren't making enough money. So there's a lot of things to think that maybe there could be some problems coming up. And we will talk about those later. This is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to stop by here for a break, and we'll be back with more of Bubba's Bottom Line after the break. What's up, everybody? Remember, we have our high school investing program that has been around for 9 years, and we're trying to continue to grow it. But of course, I finance it all, except for recently we have taken in some people from patreon.com/Bubba Trading. If you'd like to help us out and help keep trying to educate America's youth, then you can help us out at patreon.com/Bubba Trading. That'll help our highschoolinvesting.com program. And of course, don't forget to catch the Bubba Show every day from 4 to 5 at libertytalk.fm. Now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, I don't know, there's so many things going on, but we talked a little bit about the wage growth. This is the part of the equation that is going to create the inflation. Now, if we continue to see the demand for jobs, and everybody's talking about now that people are willing to quit their job, it's the biggest, quit rate, to switch from one job to another. That's fine. Again, I don't have a problem with that. But eventually, if we continue to have this success, then what's going to happen? It's going to force up to have higher wages, which will force inflation even higher. Now, again, I think that's a good inflation, but it's going to have, something's got to give. Remember Jack Nicholson and Diane Keaton? Something's got to give. I mean, we can't continue to have these crappy wages with crappy health insurance and everything else. We're going to have to see something. So that is going to be something that will give up and help push these wages higher, which will then push inflation higher. Now, we're still dealing with this ridiculous oil. Okay. Now, again, oil, and we were wrong initially. I mean, again, I'm not defending it. It was a bad trade. We puked all over it. But this backwardation formation, it continues to expand. And again, I urge you to go back and look at 2014, because markets do repeat themselves, and so do the chart patterns. And the last time we were this big in a backwardation, which means August oil is 73 or so, and December oil is 66. Okay, that is a problem. That is a bearish, very, very bearish sign to oil. Now, again, does it mean it's going to happen tomorrow? No, it could go, as any other market, it can go longer than we can expect it to go. So I think that it's something for you to look at. And again, I wouldn't go hog wild, because again, if you do make a trade here, then you do need to say, hey, this is where I'm going to jump out at. Okay, you have to have an exit plan. Remember that. So, anyways, one of the things we look at, the grain markets, had finally bounced off some bottoms. Now, again, I think that the trade wars will be very beneficial to farmers in the long run. It may be slightly painful here, but if you think about it, our prices are no lower than they were before. Okay, we're still, we were down. The low in corn was about 330 or so. I mean, corn's still 370 or so. We were down to under $4 in wheat. Wheat's over $5. The one problem has been the soybeans, and the soybeans are still, we had concern about soybeans, and you heard it on our radio show before the trade wars were even a talk. Okay, so they looked like they have finally bottomed as well. I think it's going to be a very good, solid sign for the agricultural markets, and of course we're in buying grains and stuff on dips. And I think the cattle and hog market look pretty solid as well. I think you can look for a little bit more movement here to the upside. I think probably cattle might stall a little bit here, but we still like it to test the highs. And of course hogs look like they're ready to make a bottom as well. So again, from an agricultural standpoint, we think we're in really good shape. The Bitcoin, as we talked about, the cryptocurrency space, did have a little bit of a pop last week. And of course, not a surprise, we're very bullish this space. Now again, there's always something going on, but the more that we see products come out relating to this, in other words, ETFs and things like that, the more it's becoming accepted. So again, we're looking to be buyers. Again, this is going to be very similar to the internet, okay, that there's going to be a lot of dogs out there. There's going to be a lot of companies that are going to go broke. There's a lot of coins that are going to go broke. So you just have to do your due diligence and not get too heavily involved in any single one that you might buy. Okay, but I think that this is something that you need to, again, it's something you would invest a small percentage of what you have. Okay, now, as we mentioned earlier, okay, volatility could be coming back. We've seen them try to collapse volatility. And of course, Friday was just a major meltdown and a major collapse in vol. But I think what you're looking at here is you're seeing an overall market that has just been really bubbled up. Okay, we've seen so many things happen here that are really not all that logical. Okay, and I think this is where we have to start to wonder about the entire market system. Markets never announce themselves. They don't ever tell you that this is the end. And again, we are not predicting the end, okay? But when you look at certain factors of this market, when you look at certain things that are happening, okay, you look at the strength of the dollar, okay? The dollar is continuing to gain strength. Now, that is going to create some issues, especially if we get the higher interest rates that go along with it. Now, we have not had, we had a run at rates, but we have not seen that to be able to continue. But if we continue to see rates turn up and go back up again, that is going to create another issue into the world of the markets here. Again, we're on such a shoestring, okay? With all the profit that these companies are making, everybody is so leveraged out once again, and that is what's going to create what we call, or what not just we, but they're calling the possible debt bomb. That's going to happen. Again, this is not to tell you that you shouldn't be investing. This is not to tell you anything. This is just to warn you so that when you are invested, that you only have money in that you're not going to need tomorrow. Because typically what happens is if you have more than you need, more than you can afford, when the debt bomb comes out and you're forced to sell, okay, you will find yourself putting yourself in trouble because you're going to be forced to sell out at the bottom. And that's one of the things that we are always concerned about is the human emotion that comes with trading and investing. When we look back at our own personal investing habits, those who panicked and puked and did nothing typically got hurt, and a lot did not get back in just for those reasons. And of course, that group is being punished because they have nowhere to invest their money. unless you want to put it in the bank at 1.5% or whatever, or 10-year, 2.5% or whatever it is. So that's one of the things that we have to remember, is that our emotions often play a very bad role in our investing, which goes back to that when you invest, you should only invest what you can afford and what you're not going to need tomorrow for the car payment, the mortgage payment, or whatever. So this is why you're going to see this happen, and that's why these things happen all the time. When is it going to happen? Nobody possibly knows. Okay, there's no way to have an idea of when it's going to happen, but knowing the fact that it is part of it. But as an investor, okay, and I think this is one of the things that has hurt many people, is the technology, because we're so fast and looking at our 401ks every day, okay, or our IRAs, that we get too jittery in the markets. My advice to anybody is you continue to invest in the markets and things you want to own. You continue to put a small amount of money that you're not going to need soon, and you stay with it. And if you have learned how to hedge your portfolio, then you also go to hedge it. Again, I think that it's a mistake for those who try to time the market, saying that, okay, I need to switch my portfolio to bonds, I need to switch here. If you are hedged properly and you are investing properly, it doesn't really matter. You don't need to be so totally out and have X amount of bonds, X amount here, because you're creating your own bond by doing a proper hedge on the markets. And I think that's something that is important to all of us to understand, is to how to best take care of our portfolios. Because again, there is no greater investment than the stock market, okay? At the end of the day, there is no greater investment. So we want to be able to figure out ways to stay in the market, but also invest enough so that we will not panic and puke. Because again, we're in another housing bubble. I mean, do you realize that you look at in San Francisco, for example, if you make $117,000, you still qualify for public housing? $117,000 public housing. Doesn't make sense to me. I don't know about you. But you've got major things that are always happening under the surface. And of course, we are not privy to that information, and the economists that try to talk about it, they don't know how to look at it. So I think what you're going to find out is there's going to be a much bigger problem that will eventually show up. But again, right now, I look at gold as a possible buy, but not because it's a safe haven play, because it's not, in my opinion. It's at a good level to possibly buy. It's got some room. I think oil is probably a sale. I think the grains are a buy. I think equities are probably a sale. But again, that's just from a trader's standpoint. Okay, so again, remember about your trading plan and how you want to do things, because that's what it takes. You have to have your decisions made based on if-then. And that would be part of your trading plan. In the meantime, we're going to step out for a break. This is Bubba's Bottom Line, Todd Bubba Horwitz. When we come back, we're going to have, of course, my commentary. So we'll step out here. We'll be right back with more after the break of Bubba's Bottom Line. Everybody, remember, if you want to help us out with our high school investing program, it's at highschoolinvesting.com. What we've done is we've put together a class that we are in about 600 high schools trying to help educate the youth of America. For 9 years, I've paid for it myself. The last 6 or 7 months, we have had some help from some of you on Patreon, patreon.com/Bubba Trading. If you'd like to be one of the contributors, please do so. Go to patreon.com/Bubba Trading. And don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. Now let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, every week I do a little bit of commentary, and we've got the Fed. The Fed, they're an easy target, I guess. When you have an organization as clueless as the Federal Reserve. Now, I take nothing away from Chair Powell. I think he may be one of the better Feds that there are. But what I don't like is the economists that can't tell us what's going to happen today, but 10 years from now, they'll say this was a bubble in 2018. Okay, what I don't like is their overall involvement with the lawmakers and the banks. Okay, again, I don't like the fact that the Federal Reserve is supposed to be a private organization. It's a private corporation, but it's really not, because it's run as if it was a branch of the government. The name of the Federal Reserve itself was to have you think that they were part of the government. But there is a lot of say-so. And again, I think they've totally butchered this whole situation, from them being worried about the tariffs in their minutes from 6 weeks ago to the way that they're holding down and refuse to raise rates commensurate with the way the market is going. You're already seeing that short-term rates are going higher than long-term rates. So the yield curve is inverting. Okay, so if that is the case, that is a sign of a potential recession. Now, somebody the other day when I was on air on Fox said, well, maybe it's not a recession. And I'm not saying it is. I don't really care. But what I do care about is the yield curve inverting is the same as backwardation in oil. It's a bearish sign. It's not a good sign. Long-term rates should be higher than short-term rates. That's as simple as it goes. I mean, again, just use logic. But I think it's time, and I think it's time to audit the Fed or end the Fed. Again, part of the cryptocurrency world has that very target in their mind, is to end the Federal Reserve. It's time to end the ability for the central banks to manipulate currency. You're seeing it going on in China right now. And again, it's not just the Fed, it's the central banking system around the globe that continues to manipulate currency to make things happen. And typically it's to get better GDP or for whatever. But is it, again, I go back to the same thing that we talk about often, is why can't we just have free markets? Why are we continually having to deal with letting people that have no clue of what's going to happen next make a decision that affects the entire world? Okay, I mean, Chair Powell is one of the most powerful men in the world today. Okay, now again, I don't say that he's not capable, but I don't think anybody's capable when you have a potential to let the free market trade. That's where I always have a problem, is when Ben Bernanke was the Fed chair in May of 13, he was going to hike rates, and the markets balked him out of it. They called it the taper tantrum. Now that he's out of the job, he's a big advocate of raising rates because it benefits his new job. My whole point is that we need a system that is completely clean, that has just a true free market environment, not letting the asset classes price themselves, not being manipulated based on what the Fed can do with interest rates, what they can do with currency, and so on and so forth. Their original operation was to stay away from destruction. But to carry it through for what they've done is not what they were intended to do. So I think it's either time to audit the Fed and have it, let's go through their books and see what they're doing, because again, they're just, creating more paper money, more trash, just another paper trail of garbage. So I think it's time to look at what they're really doing or end them. And I think that, I know that Ron Paul was on that bandwagon, but again, I just want the ability to have a free market. Let the free markets decide, get rid of all the onerous regulations, get rid of the ability for us to manipulate certain things, and let the free markets trade. That's the way I see it. That's it for today's Bubba's Bottom Line. Todd Bubba Horwitz. Everybody have a great weekend. Thank you so much. We'll see you back here on Monday with Bubba's Daily Update. This is Todd Bubba Horwitz. Have a great weekend, everybody. We'll see you later.